President Trump says he fired Federal Reserve Governor Lisa Cook this week. It's the first time in the central bank's 111-year history that a Fed governor has been fired. And experts say it could affect average Americans. Lisa Cook's termination is likely to end up in court, and she says she'll keep doing the job in the meantime. If Cook's seat becomes vacant, Trump can nominate her replacement. He's been pressuring board members to cut interest rates beyond what they think is good for the economy. So here with more on the situation and the impact it could have on the economy, partner with Burry Financial Group, Brian Laraway. Brian, thank you so much for joining us.
Thank you for having me.
Of course. So when was the last time we saw a president trying to influence the Fed Reserve's decisions?
Well, it's actually more common than you would think. The difference is a lot of times that's behind closed doors. This is very much out in the open. So we have seen it in the past, but there's a little bit of a concern with how out in the open and how much prodding is going on.
Yeah, does it seem like investors are concerned about what's going on?
I think investors have a little bit of a wait and see approach. Even in this past week, we saw a little bit of volatility, but stocks and bonds kind of behaved. We saw a little bit of a move up in gold and the dollar down. But overall, I think the market is in very much a wait and see kind of mode.
Now, as we know, and as I just mentioned, Cook is now suing over this attempted firing. If we were to get a majority of Trump appointees or references on the governing board for the Federal Reserve, what impact could that have long term?
Yeah, great question, and the answer is we don't quite know. This is kind of uncharted territory. That being said, we'll kind of let this all play out. If we did see something like that, I would expect that interest rates on the far end would possibly go up. The reason being is other economies where monetary policy and the government are tied so closely together, there's political risk. So higher interest rates are expected by for people that are buying bonds. So we'll have to wait and see.
Yeah, and you mentioned how some things are done behind closed doors, what
Correct.
Trump is doing. Was there a time that you remember in history where the Fed was more politicized?
This would have been before me, but Richard Nixon was very much in the fore and really wanted Arthur Burns to keep the Fed chair at that time, to keep rates low. He did, and then we had horrible inflation thereafter. So let's hope we don't see that. And we're a long way from that. We have Fed interest rates are at 4.25, and inflation's running between 2.6 and 2.9, depending upon what you're looking at. So we have a lot of room for the Fed to potentially cut. But to answer your question, we have seen it in the past.
Yeah, and you kind of touched on this a little bit, but we are waiting for a highly anticipated interest rate cut expected in September. After all of this, do you think that Jerome Powell will still go ahead with his plan?
Yeah, I believe he will. It's been kind of baked into the cake at this point. The market has an 85% chance that they're going to cut at least a quarter point, which means there's a 15% chance that they might cut even more, or maybe not cut. But we think at this point they're going to do this cut and then probably sit back and look at some corporate earnings, and also what's really important is the unemployment data.
How have tariffs and the trade war affected the Federal Reserve inflation plans?
Yeah, and that's actually been a little bit difficult right now because of the way that the tariffs have rolled out. Like, they came out and then they were pulled back, and then this country this and this one. So it's a little bit hard to see in the numbers right now, but the Fed believes it's going to add about 1%. So if that's the case, they do need to continue to watch and be a little bit slow and guarded on how they do cut rates.
What's your advice to investors as we go through this?
Don't get caught up in the headlines. Stick to your plan. You need to make sure to stay diversified, assess your risk, your goals, your time horizon, and then whenever there's a question, talk with your advisor.
All right, lots to keep an eye on there. Well,
Yes.
Thank you so much for joining us this morning.
Thanks for having me.
Appreciate it. Of course.